Yeah, I didn't want the corner, so that's
Hello? Hello?
Yeah, the corner is
Hello? Great. Good morning, everyone. A very warm welcome.
How long is this until when?
I know we're getting started a bit late, but if I can have you take your seats, we're going to try and get right into it. So I'm Ashley Olson-Onyango, Head of Financial Inclusion and Agri-Tech at the GSMA, and it's really a pleasure to be here with you for this session. Today marks an exciting milestone as we officially launch a new report, From Connectivity to Coverage, Scaling Resilience Through Mobile-Enabled in Microinsurance. This is a collaboration between the GSMA and the Microinsurance Network, supported by the Gates Foundation and the Government of Luxembourg. For many years, mobile technology has been used to deliver microinsurance with mixed results. But today, we're seeing a renewed appetite within the mobile industry to offer insurance as part of a broader suite of financial services that build customer resilience. The question is, how do we do this better and at scale? This new study was born out of a shared recognition between the GSMA and the Microinsurance Network that the time is right to re-examine the role of mobile in closing that gap, and to chart a way forward that is both commercially viable and socially impactful. Drawing on best practices and case studies from Asia and Sub-Saharan Africa, the report highlights how mobile operators, insurers, and technical service providers can work together to overcome the challenges that have held back scale in the past, from payment frictions and limited awareness to regulatory barriers. It also captures the innovations that are emerging, from digital marketplaces and embedded insurance models to the early use of artificial intelligence and contextual product design. At its heart, From Connectivity to Coverage is about collaboration, the collaboration that made this report possible and the collaboration that will be essential to build the next generation of inclusive insurance solutions. We want to see more partnerships between mobile money providers, insurers, regulators, and innovators that make insurance accessible, affordable, and trusted by those who need it most. So today's session is not just a publication launch, it's a call to action. A call for all of us in this room to take the insights from this report and turn them into new ideas, new partnerships, and new opportunities to strengthen the resilience of the underserved communities around the world. So to explore these themes further, I'm delighted to invite Asier Achutege, Senior Manager at the Microinsurance Network, to join me for a fireside chat.
It's good.
We had a long discussion about how to say his last name, and I'm fairly positive I still botched it, but I gave it my best shot. Super. So I want to talk about the report and also some of the stats that we're seeing. So the data shows that insurance penetration in emerging markets remains below 4%, while at the same time, we've seen mobile money really exploding. So 15 years ago, many believed that mobile money would be the game changer. Why hasn't that promise materialized?
Okay, thank you, Ashley. Well, first of all, I'm going to try to block the audience because there are a lot of pioneers of this entire world that are here. A lot of insurers that, and I don't even want to say half of my board as well. So everything I say will be used against me. So around 20 years ago, let's go back a bit. So distribution is, of course, one of the biggest challenges of the microinsurance sector. Like, how do you get to your customers? And around 20 years ago, when mobiles were getting into each home, everyone was getting a mobile phone. It made sense, logical sense that it's a great way of getting into the homes of all these people. So that distribution channel seemed to be solved thanks to mobile networks. But unfortunately, yes, we can see, according to the numbers in the report, we have around 1.8 billion mobile money accounts, but we only have like 300 million people that are covered by microinsurance. So there is a huge gap. And out of the 340 million people that are insured, most of them don't actually have a mobile money account. So I mean, the comparison is a bit, it's not direct, but it is I think a great, it shows that there is a huge gap. So why hasn't it happened? So first of all, when it all started, it mainly started with freemium products. So basically, you had a mobile phone contract, and it included some type of cover. Mostly, it was done as a marketing initiative from the operators, which was actually an interesting way of getting people to know what insurance was, but it was not really. So you had a huge number of uptakes. So you had a lot of millions of new customers or new people that were insured, but really, did they really understand what they were signing up to? Once that marketing campaign lapsed, getting them to stay on and actively paying for it was not that automatic, and so a lot of customers then left. The other issue or the problem is, I think it was mentioned before by Roshani, that for these customers you cannot charge a big amount upfront, but you actually need to collect regular payments, monthly payments that are small and that they can afford. But especially because with most countries don't allow, the regulation doesn't allow to discount it directly from their accounts. You had to go back every month again and convince them again and again and again so that they make the payment. So eventually people stopped paying for the premiums, so the premiums were not collected anymore. Then of course the trust and awareness that we've seen. Not everyone understands really what insurance is or what it is for. Nobody wakes up in the morning and thinks about insurance. So convincing these people and making the effort of convincing them was something that mobile network operators were not, it wasn't in their core business, so it was not in their interest really to do that. And then finally, data sharing was not ideal. So the different companies or the different players that are involved in the entire value chain did not talk to each other, or at least did not have very, the flow of information between them was not ideal. And those partnerships were mostly done out of quick interest, but not really aligned. So.
And this, what was revealed in the report, which was interesting, is that the number of mobile-enabled insurance products has actually doubled in the last 5 years. So what's fascinating is adoption wasn't really growing, or it was growing in freemium models but dropping off, yet people were innovating and developing products to distribute through mobile-enabled channels. So what do you think is really holding back the adoption side?
So, yes, indeed, in the report we can see that in 2020 we tracked 135 products, and now in 2025 we had 282. So it's more than double. So obviously there is not a problem of supply. There is not a problem of new products that's coming out, but it's that people don't want to use them, or at least they don't use them. Or they don't know how. Maybe they don't know about it. So they are there, but they're not really going where they have to go. There is also an issue that there are a lot of new products, but maybe the countries that have been implementing those products have not grown either. So it's mostly in the same countries that the products have been multiplied. It's not. It has the impact of mobile money and has not been equal in the entire world.
Yeah.
So now, why hasn't the uptake been increased? So as I said before, so the payment friction is a very important element. If you need to convince people to every month that they have to pay, and then you go back to them and ask them, you have to pay, then they're probably going to realize that I haven't made a claim in the past 3 months. Why should I pay again?
Yeah.
so that's one of the issues that could be addressed. The other one is, of course, consumer awareness. There are, different types of products that have come to the market. Are they really, have they really been sold in a way to the customers so that they understand what they're getting? Or are they just getting a bundle, a package of something and that includes some sort of insurance? Then, as I said before, of course, is the misalignment between the partners. I think the example was given before of if you put in a dark room, if you put an insurer and an M&O, maybe nothing is going to happen.
Yeah.
So the question is, how are they talking to each other? Are their interests aligned? Are their incentives aligned?
Yeah.
Is maybe one just wants more customers, the other one just wants more money, the other one just wants to have an impact. But if all of this is not aligned,
Yeah.
then it is a bit difficult to make it work in the end. And I would also just go again to the fact that they don't share information. So each of the players everything needs to be more transparent between them. So if there is no trust between the players, they cannot really expect that there is trust from the client side.
It's interesting you mentioned trust, because one of the things that I think the MNOs and mobile money providers can bring is really this trust, brand recognition, the trust in the brand, the loyalty towards it. So how important do you think this could be in driving uptake and retention of microinsurance products with these partnerships if they work?
Yeah, trust is, of course, one of the key factors. People need to trust. If they're taking insurance, they need to trust that they're going to get the claim if something happens. If you convince someone to take life insurance, they need to trust that if you die, their family is going to get paid, and that you don't need to go and chase them, because obviously you will not be able to. So if they don't trust the provider, then there is no way they're gonna get it. Now there is generally people do trust their mobile networks operators. At least that's there is general trust because they use them every day. They use their phones every day, and all the different services that they offer. So there is already a trust there. And like in the previous session, it was mentioned that the fact that you can piggyback on the trust there is for the other brand, it's a great thing for insurers. And so it is a logical relationship that could be made as long as the interests are aligned, of course.
Yep. You mentioned the freemium model earlier, and there's some other models that come out in our report, opt-in and hard bundled models. I'm just curious what you think the trade-offs are between them, right? And where do you see the positives and the negatives?
So freemium is how I think everything started. So with the freemium, it made sense to get a lot of uptake. So you offered this free product, and everyone takes it because it's just free. And then eventually, the idea is that eventually they realize that it's good, that it works, and then maybe they're willing to maybe pay a bit. So in that sense, it was great to get a lot of people enrolled. The biggest problem is to keep them enrolled, is to ensure that if they have this product, they understand it, that it's not just signed up because it was free. Unfortunately, getting the information or educating the clients has not been the priority of the people offering this type of products. So nowadays, in the report, it said the uptake. So while it used to be the most common way of products in this area, now it's just around 4% of the products are sold as freemium products.
Yeah.
So that's on the freemium product, which can also be related to the opt-out, which is kind of a freemium where you can opt out. Another thing with the freemium is that they were based on airtime. So basically, you get an amount of airtime, and then what's left you you can use as a payment for the freemium. And nowadays, people don't use very much airtime anymore. Now people are using more data. So it's I think eventually will probably disappear as many of the things disappear. Then the opt-in are of course much better because you need to actively opt in and get the product. So there is an incentive of selling it, explaining what is the product, what are you getting out of it, and then people take the decision. Of course, then the uptake is then much lower. So it's below 7%. But at the same time, it has a bigger impact. It is really much better. And then another is, of course, the bundles. If you bundle, hard bundle, and that's probably the one that has the most future, because mobile network operators, they don't really know who their clients are. They don't know their clients because they don't need to know who their clients are. They just need to sell, data and airtime. So for them, it is kind of the same. But when you develop new microinsurance products, you really need to understand what your clients need. You need to really understand your clients, which is not something that mobile network operators do. So there is this huge opportunity now with these hard bundles where you can really target a package to a segment. So, for example, I think probably it's going to be mentioned later with the Safaricom example, but if you take a group of the ride-hailing apps, something like this, and then you already know who your clients are. They're going to be drivers of this type of that have this job. So what products do these people need? They need, I don't know, accident cover, health, depending on what you want. So with this, you can really target a product to a segment of the population.
Yeah, great. Well, that's the future, I guess. And I guess that takes me to the final question I have for you, which is really about this untapped potential. So the report highlights that only 12% of the potential microinsurance market is currently covered. So there's huge opportunity there. And what do you think's the biggest untapped opportunity for scale?
So interestingly, just the session before, Craig was talking about using microfinance institutions as a good distribution channel, but unfortunately not everyone takes a loan, or not everyone has a loan, not everyone has constantly a loan, but everyone uses a phone every day. Like, people use phones, and phones stay with you. So combining and using it as a distribution channel does make a lot of sense. It makes a lot of sense, and there is a huge opportunity there to trying and finding a way to making all of these things that haven't worked and learning from the mistakes from the past, and trying to nowadays, okay, let's sit down and see, okay, what can we do now to make it work? Because again, people use it every day. So the other thing is you need to be more innovative when making products, adapt them, as we said before, you need to adapt them to your clients, understand who the clients are, but for this, you need everyone to be talk and sit down at a table and have a transparent conversation on what are we looking for, what do we want, and that would make it more possible to design products that are really targeted. And the other issue is the payment problem, right? It's like, how can you ensure that there are regular payments when regulation usually doesn't allow for direct debits, for example, directly from the mobile operators? That's something that needs to be solved. I'm sure. So people are very innovative. I think this thinking outside the box is very, very important in this. But these are elements that need to be touched on and solved. But I'm sure there is a way of solving it. There are a lot of examples of things that are happening. So I invite everyone to read the report. I think there are a few examples that are quite interesting. And trying new things.
Yeah. Thanks, Asier. So definitely some more innovation around distribution, hard bundled products. Aligned incentives, I think that's a massive one, really thinking about the partnerships that it requires to distribute microinsurance, and then regulation, of course, needs to also catch up with some of the innovation. So thank you so much. Please help me in thanking Asier for his great comments and insights, and as he mentioned, please do read the report.
Yep.
Great, so I'm now going to invite our panelists up to the stage. So Lorenzo Chan, CEO of Pioneer Insurance. He's leading one of the Philippines' leading insurers with a focus on customer-centric products and digital transformation. Welcome, Lorenzo.
Thank you.
Next, Nilofer Sohail, General Manager for Channel Life Strategy and Growth Segments at EFU Life, spearheading initiatives to expand distribution and reach new customer segments in Pakistan's life insurance market. Welcome.
Thank you.
And online joining us is Aliyah Kanbai. Can we get her online? There we are. Hi, Aliyah. Aliyah is the tribe lead for wealth and insurance at Safaricom Kenya, and she's driving innovative financial solutions that enhance customer access to wealth management and insurance services. Welcome, and thanks for joining us. Good. So we have more chairs because the last panel certainly had more speakers, but that is no reflection of the level of insights that we're going to bring to you today and the expertise, and we still hope to give you lots of good nuggets to take home with you today. So we're going to kick off and talk a little bit about distribution models. We touched on that a little bit, and the role of digital. Nilofer, I wanted to start with you. So EFU Life has decades of experience in traditional insurance. And in 2018, you pivoted toward lower income customers and microinsurance. So tell us a little bit about what drove that decision and how central digital technology was in making it viable for you.
Thank you so much, Ashley, for this question. But before coming to the question, firstly, I would like to thank the organizers. I think inclusive insurance in an inclusive finance conference, this is a really important topic. In the previous panel, this was highlighted, but if I don't highlight this, I think I will not do justice to it. So both the badges very close to my heart, EFU Life Pakistan and Microinsurance Network. So insurance in an inclusive finance, in an inclusive world is absolutely important. Second, I would like to thank you all for choosing us, for choosing this panel, and for being here. So I think a huge round of applause for all of you for coming here and choosing this panel. So now coming to your question, Ashley. So this question is very near to my heart because, as you said, traditionally a life insurance company operating in Pakistan. In 2018, I would say 25 years we were operating in Pakistan. Very clear distribution lines. Our distribution channels was the agency network, the feet on street, people going and selling insurance to other individuals. Then it was corporate, our corporate team going to the organizations and selling insurance products, and bank assurance. And bank assurance, the primary insurance product was the saving product, the investment-linked insurance product. We were talking about and we were writing premiums, an average, I would say, $2,500. So all of you know that our currency is very teeny tiny. So this is a huge amount for us. And in 2018, we were seeing a lot of changes coming in. What were those changes? So for the first time, our central bank, who is not our regulator, but who is the banking regulator, they brought in an updated version of National Financial Inclusion Strategy. And for the first time, it mentioned insurance as a very key pillar to the financial inclusion strategy. That got us motivated. Then we were also seeing around the corner that everything was changing. Technology was becoming very prominent. The 3G, 4G penetration was increasing. So at that point in time, Pakistan was a population of 220 million. Our retail base, and please don't laugh, our retail base at that time was 500,000 customers. Wow. Other were our corporate customers. But we were significantly profitable. We were largest at that time also. So really, it was nothing that needed to change, but we sat and we thought that if we continue to do things as we were doing, maybe after a time we'll become redundant. Or insurance penetration in Pakistan was at that point much lesser than 1%. This point also, it's less than 1% of the GDP. I'm not very happy, but one other measure that we decided to see as a company was that we will count it on the number of lives insured. So how many lives do we protect as a company? And we thought that what will change in terms of that? And then we were closely and silently sneaking into the Microinsurance Network reports, what was happening in other markets, what was changing, and we were seeing one trend was continuously increasing. That was the digital and inclusive insurance. And what we realized was that we will not be able to do it alone. Even if we try to do it, we don't have that kind of scale. So we thought, why not partner with the organizations that have reach to millions of the customers, and not just the reach. The customers trust those organizations. They come to those organizations for their daily problems and for their daily needs. So then is when we decided that no, we'll not set up our branches pan-country. We will partner with organizations like telcos. We will partner with organizations like fintech. We will partner with organizations like micro-insurance institutes in the country. And that's how we'll reach to this larger population. And then we decided if we do paper, it will not work. So technology has to play a role. It has to be an enabler in this entire journey. And at that time, the only kind of insurance that an insurance company could write in Pakistan was all paper-based. And it was like 10 forms, 10 papers in one form, and we were now talking about going digital. Because digital was, we were seeing the next wave. I would really thank our regulator for giving us that platform, that when we went to them and we said, no, we will not use any paper going forward. So we will do it either on phone, either on the mobiles, or either completely digital journey. And they were quite significantly interested, which was the best thing. When your regulator becomes interested, I think half of your problem is solved. So yes, so that's how this journey started, from one partnership. And one important thing, when we tried to do it, I think external forces were not that bigger of a problem. It was the internal forces. So everyone was like, what are you trying to do with the company? What are you up to? You are bringing a company that has such a huge average premium ticket size to like few cents a day, literally. How will this scale? And what if the claims come? Everything will go down. So this was the kind of conversation. And yes, the first year was not that great. We saw in Matt's presentation today that it's always difficult. It takes a lot of patience. We did 10 projects, 9 failed, 1 succeeded. But then, fast forward today, we, in our digital and inclusive ecosystem, we have 35 partnerships. We work with 14 ecosystems. By ecosystems, I mean the kind of platforms. Telco is one ecosystem, ride-hailing is another ecosystem, microfinance is the third ecosystem, so payment platforms is the fourth. So now we are very happy to say that you can be our distributor in any capacity, and you can come in as an ecosystem. And this year, we will insure 10 million lives under the digital and inclusive framework.
Wow, that's impressive. Digital from the start, and I also love that you brought in this element of partnerships, which I mentioned in my opening remarks, so critical to really driving this scale. Lorenzo, I want to move over to you. With ASEAR, we touched on the freemium model and this limited stickiness or kind of unrealized success, if you will. Card Pioneer took a very different strategic approach to scaling microinsurance. So let me know, or I'd love to hear if you have additional insights on this freemium model, and really just let the audience know more about your strategic approach and how it differed.
Right. I think ASEAN covered, what's happened to my voice? ASEAN's covered quite a bit. What's happened to my voice?
I'll give you.
Okay. ASIA has covered quite a bit of the freemium model bit. I mean, my only addition is that I don't think there was anything inherently wrong with that model. I think it was just that many people were not aware that they had insurance or that they don't remember they had insurance. And if you're neither aware nor remembering that you have insurance, then you're not very likely to claim from it. And if you're not likely to claim from it, there's very little experience to confirm that, to confirm or unconfirm the value of your decision. And so that sort of, I believe that's sort of what happened. Now, we were just lucky in the sense that, I don't know if lucky is the right term. In the Philippines, we were trying to say, do we do a freemium model as well? But then we were monopolized by only 2 telcos in the Philippines. And they were both very difficult. And they both came up very early on with their own mobile wallets, which in those days were not successes. I don't think they'll mind. They were not successes. It took them forever to push mobile wallets, and any attempt at selling insurance, I think for them was please stay away. And because of that, we said, okay, how do we reach out to the masses? And we just said that let's do partnerships, and people talk about it a lot. And our version was that let's do partners, and we found several good ones. I mean, today we have quite a bit of partners today, but one of the biggest ones was microfinance institutes, because they were the ones who came to us to say that we think we need insurance. We give out a lot of loans to people, and start a business, to buy equipment, and the moment something happens, a fire, a typhoon, a death, an accident, they sort of start from zero again. They lose everything again. And so this insurance should come in to bridge the gap. Mm-hmm. And that's how we started. We said, but the first thing we do is we have to convert some of your members to buy insurance, because otherwise, I mean, how do you sell it? How do you sell something you don't know anything about? And so that's what happened. And so today we have about 2,200 of what I refer to as alpha females who are extremely well-versed at what they do and the ability to multitask and tackle questions. So they actually do go around a lot, their communities to offer insurance to a lot of their, and I think that has worked quite a bit. Now, so in case you're all wondering, so what does this have to do with GSMA and all this topic? So we have in fact provided them, because the volume has scaled into the millions, we provided them now a mobile app to do enrollments. So they carry this app when they go out to the field, to the boondocks sometimes, to enroll. And of course, we provide an offline mode, because you enter all the data, and then once you come back to town or city, then you can upload it. So that's become quite a useful tool. So we're quite happy with it, I think, yeah. So.
Amazing. Really the kind of phygital distribution model with some physical engagement face-to-face, but also using the digital technology. And I had the pleasure of meeting some of these alpha females in June in the Philippines, and they very much are alpha and very fun, and took a lot of questions. We're going to switch to Aaliyah. So Aaliyah, you're with Safaricom, a telco. But Safaricom recently obtained an insurance agency license. So I'd love to hear what incentivized this strategic step and the then forthcoming launch of the first microinsurance product.
Good afternoon, everyone. Sorry. Thanks, Ashley. So the first product that we launched was a device insurance. And the reason we did device insurance was that it was a very low-hanging fruit for us. One of the biggest challenges that we have in Kenya is that we still have a lot of usage of 2G and 3G devices. And so our mission was to get a lot more 4G and 5G devices into the hands of Kenyans. These devices are typically more expensive, and so a lot of the Kenyans couldn't afford them. So what we did is we started with a lipa mdogo mdogo, which means pay slowly facility, where a customer would come in and they can pay a deposit, and then they would pay us over a period of time and get a 4G or a 5G device. And so that device typically for a lot of Kenyans enables them to do business. So a lot of trade happens on that device. If that device gets lost, they can't trade, and then there's no way for them to pay us back. So it was very important for us to ensure that We cover those devices for credit life. So in the event something happens to them, we would not be out of pocket. But more importantly, if the device gets stolen or broken, they have the ability to come in and claim on it so that they can still continue their business and trade. So that for us was one of the low-hanging fruits. And again, given Safaricom is a telco, we thought that's the biggest opportunity for us, just to start with device insurance, not just on the back of device credit, but then open it up to customers who also want to buy devices on cash. So that was the rationale for us to start with device insurance. But just quickly, because M-Pesa is the payment gateway that we have, and we have a 95% penetration in Kenya for mobile money. So literally everything happens on mobile money, including credit. We wanted to enhance that and start offering things like insurance as well as savings, so that you give a customer a holistic solution off their device, and it doesn't necessarily just become payments and credit.
Thanks,
Ashley.
Aaliyah. It's really touches on this point of like the incentives and aligned incentives, having devices in people's hands, being able to enable the digital credit side of that so they can pay slowly, but also then minimize the risk to Safaricom. So that's great. You've also now launched a second microinsurance product, which is income protection for small-scale merchants. And both of these products are digitally embedded. So what design decisions help to make the mobile journey frictionless, and what lessons are you taking forward?
All right. So I think similar to what Asia said before, it's really important for you to understand your customer. So the second product that we launched, which is the Income Protect, was on the basis that a lot of our merchants, if they are hospitalized or anything happens to them, they have no income to support themselves or their family for the day. So we really had to craft a product that speaks to the challenges that they face on a day-to-day basis. So I think going back to really understanding your customer is critical. I think the second thing we realized is that you do need to have a USSD journey for our customers, because a lot of them are still USSD native and haven't moved off onto your 4G or 5G devices. So as you're creating a product, make sure you do have a USSD functionality for them. The third one, and I think Asia touched on it as well, was how do we ensure we have repayment stability over a period of time that the insurance is there. So we have, a weekly payment or a monthly payment, and we have a standing order that when a customer buys the product, they opt into a standing order sort of functionality. And so every month we will debit their wallet with the premium amount. So it ensures that unless you don't have money in your wallet, premium continues to be paid over a period of time. So that ensures the continuity of premium collection. And I think the last one was just make the journey very simple. So typically insurance, I think like Nilofer said, was 10 pages of forms. We've managed to do it in 4 steps on your device. So in 4 steps, you've opted into the product, you've bought insurance, and you've made a payment. So the journey becomes very easy for the customer. And I think that's what is quite critical for you to ensure understanding of what it is that you bought into and acceptability. Yeah.
Great, thank you. And you touched on recurring payments, which came out in our report as well as one of the challenges, because not all markets, not all regulation supports that in all markets. So Nilofer, I want to come to you and just ask, how important are recurring payments for your premium collections on your products?
So I'll expand that a bit. I think technology and recurring payments both are very important. One of the issues I think many of us would agree to is to reach out to the end customers. So yes, you partner with a middle partner, that can be your telcos, that can be your mobile platforms, mobile wallets, but then how you reach out to the end customers. And when you reach out to the end customers, how do you then ensure that that payment will keep on coming? Because the amounts are very small when we talk about microinsurance or inclusive insurance. So the recurring payment becomes very important. So in terms of distribution channel, as Ardya was just mentioning, I think what we have also done at EFU Life, we have a series of distribution channels. The max, I would still say, is the telesales, but now that's not just the distribution channel. We have USSD, we have digital. We even are now trying out robocalls, and we are trying to use AI agents to distribute our products to the customer. Obviously, we need to be very mindful. These are very personalized offerings. So, and the people in Pakistan, English is a faraway language for them. So our Urdu is the main language, and there are a lot of regional languages that people are very comfortable. So when you use technology, you have to be very mindful of all those things. Recurring payments becomes very important. Either you embed the insurance into the journey or you sell it voluntarily to the customers. I would just give an example of everyone sitting here. Once you enroll for Netflix, even if periods come where you don't use it for like 3 months, 4 months, do you de-enroll from it? Not really, but you are paying those monthly payments. The same is the case with insurance as well. Recurring payments makes it easy, but it should never be in the way that the customers are not aware about it, because then what will happen is the moment they are aware, they will opt out from it. So the recurring payments make your premium journey smooth, but the responsibility still lies with the insurer, with the distributor, as a partner to inform the customers at all touch points that they have insurance. How can that be done? That can be done through benefits. That can be done through value-added services that you embed with the insurance products. That can also be done through your claims testimonials. So what we have seen in Pakistan is the best marketing campaign that has worked for us is the claim testimonials. When you do that, you see people getting engaged to it. When we do a claim testimonial campaign for a distributor, I think that's the only time when people come to us and ask us what this product was. So yes, recurring payment becomes very important. Either it comes through airtime or it comes through mobile wallet. But then I would say the responsibility of an insurer doubles. It is not decreasing in any way, it's actually increasing, because the chances of complaint is also getting higher. So with insurance, I often quote that simple is sometimes harder than complex. This is what we have seen at EFU Life, that when we try to do it simply, they are like, how? And when we try a complex way, it usually goes through. So yes.
Yeah, so that transparency aspect, that's great. We're going to shift, Lorenzo, I'm coming back to you. We're going to shift back to this model side, distribution model. And one of the distribution models presented in our reports is digital marketplace. So thinking about a mobile money super app and a consumer being able to go onto their super app and see a bunch of different insurance products, insurers, et cetera. But this requires a customer to proactively seek out insurance. What do you think is needed to make a digital marketplace really work?
I think there's no way of sort of skirting the issue for a product, especially an insurance one, to work on a digital marketplace. Your product needs to be relevant to your target audience. And it has to be not just relevant, but it has to be meaningful. And so far as I'm concerned, in our market, the one product that has come of age on digital marketplace is travel insurance. Whether it's a local travel or it's overseas travel, people actually do automatically, I mean, without prompt, they're going to fly out, they're going to take a ship somewhere, and so they automatically go and look to buy insurance. And they also know that sometimes it's a last-minute thing, so 24/7, the digital marketplace is the way to go, because then I can access it, get cover, and then board the plane. I think that is the best example. Unfortunately, those of us who offer insurance are not in the same boat. I think it's still, a bit of an effort. And so we've recently tested a cover for migrant workers, because in the Philippines, every Filipino migrant worker who is going officially overseas through a land-based agency deployment needs to buy insurance. And so normally, insurers capture this through partnerships with the manning agencies. But then you have a whole host of millions of Filipinos who finish their contracts abroad, come back to the Philippines, and then they just go directly back to their employers without going through a manning agency anymore. So they cut out the middleman, who now then don't have access to insurance or don't want to pay for the insurance. And so so what we do is we've posted on this marketplace, mobile marketplace, one of such product for these markets. So what we've done is you have to drive your target audience to the marketplace. And so we do so through social media campaigns, and we also have chat groups among local communities that remind them that if you need this, this is the way to go. And I think that has proven quite helpful. The first couple of months was a struggle. I think we struggled with a couple of thousand. But I think now in the 6-7 months, they've charted up to 10,000 enrollment. So that seems to be, that's led us to be cautiously optimistic. So.
Strong marketing team then? Good. Aliyah, you mentioned that Kenya, it's a very mature mobile money market. You mentioned 95% penetration. But designing for low-income or informal workers still remains hard. So what challenges do you still face in designing and scaling microinsurance products for this market?
Thanks, Ashley. So I think the first thing is the trust. Trust is a huge part of why people will buy insurance, and the comfort that if they put in a claim, it's going to come through. I think financial literacy is also quite important. Penetration in Kenya is less than 3% of insurance, and most insurance is insurance provided by corporates. So very little will be actively bought. So just getting that tier of Kenyans to understand the importance of insurance and why it will help, I think there's a lot of work that needs to be done. I think the third thing that is, and maybe it's not unique to Kenya, is the social setup. So in Kenya, if there is a challenge with anything, so whether there's a death in the family or someone needs to go to school or anything like that, the community comes together. And so they put together funds and everyone will chip in. So there's always been a sense of comfort that why do I need insurance if I can turn to my neighbors and my community who will put money together in the event of something for me to make sure that issue or something is taken care of. So I think just the social setup we really need to get around that. I think with the younger generations coming in, they're probably more open to taking insurance, but a lot of the older generation still relies on a community setup for you to take insurance. The last thing, and insurance, funeral insurance in South Africa, for example, is quite big, but in Kenya, funeral insurance the penetration is very, very low. And I think that also comes back to culture, because by you taking insurance, it's almost like you're wishing a fatality to happen. So just getting over a lot of those cultural challenges that people have had, that if I take funeral insurance doesn't mean I'm inviting death into my life, but I am preventing a burden on the rest of my family. So I think that just the social norms, the financial literacy and trust has been quite a bit of a challenge. I think where Safaricom comes in is because it is a very trusted brand, that we really leverage off that to be able to help push insurance. And again, leveraging off the telco side, so ensuring that a lot of our products are bundled or embedded in existing products and services that our customers already consume, makes it a lot easier. But then, like Nilofer said, you do have to inform them that they do have insurance when they do purchase a product. Yeah.
Thanks, Aliyah. I think it's a really important point that we can design and structure products for accessibility, for affordability, but at the end of the day, perception, consumer behavior is still a huge challenge, and I think that's can't be under stressed in this context. So I want to switch a little bit to the future. I have one more question for each of you on the future of mobile-enabled microinsurance, and then hopefully we'll have a couple of minutes for some audience questions. So if you've got one burning, get it ready. Nilofer, where do you see the future of protection going if we truly want to achieve financial health beyond access alone?
So I think I'll connect to your last comment and Alia's last comment. For me also, the innovation is not about creating products. It's all about solving problems. I think creating products is the easiest bit. Now, if you ask me, and of the entire equation, the main challenge lies around changing the mindset of many people in that value chain. Changing the mindset of the distributor who you are distributing those products with, changing the mindset of the customers who are mostly your first-time insurance buyers, who haven't tasted insurance, and then your own internal company. I would also give one example. People might find it funny that why even I am quoting it here. So in Pakistan, our largest telco partner, mobile partner, is currently in the phase of going into an insurance business. So they are in the phase of acquiring a small insurance company, and they are valuing that insurance company. So, and their 80% of their revenues last year from insurance came from us. So people came to me and asked, oh my God, what will happen? The biggest stream of revenue is now going to go. And yes, for the first few days, we were a bit shaken about the news. But then when we thought more about it, it was all about that telcos thinking that insurance can be a viable business model. We have played a role somehow in that. And what happened next? The most important thing that happened next was the telcos, which were not that active in insurance, have reached out to us. You know what? Because now two things. They don't want to work on that structure because they are already in the process of valuation and negotiation. But now they also understand that insurance is important. And no, not all will go into the phase of acquisition. So it will be more of partnerships, more of value creation, more of value addition. So future for insurance for me will again be continue changing the mindset. One more important thing that is very important, we at EFU Life now have our preventive health brand by the name of WIN. So we created a separate wellness brand within the EFU Life ecosystem. And the entire purpose was that when the customer used to contact us, it was not a very happy moment. I think all of us would understand. In life insurance, unfortunately, most of the times the customer is not even there. And in the case of health emergency, it's really a health emergency when the customer is contacting us. So the problem throughout the journey was how to contact with the customers in that duration. So we thought that preventive health and wellness is one of the means by which we could keep that regular engagement. So now we nudge the customers that, look, have you drunk your required glasses of water? Have you done your steps today? Have you exercised? And then we are also giving them rewards for that. And that instantly is increasing our engagement and motivation day by day. So customer engagement in various forms again becomes important. Last but not the least, the most important for me will always be awareness in the country like Pakistan and many other countries. As we were discussing, even in the established nations where the insurance is not voluntary, many of us don't buy it. So how constantly through your efforts will you continue increasing the insurance awareness of insurance is very important.
Great, thank you. I love the positive spin, positive engagement. I do think that if you're in the insurance business, it must be very tough. You are dealing with hard times for people on a daily basis. So Aliyah, Safaricom's agent network is core to M-Pesa's success, and we heard Lorenzo mention the phygital approach that they take. How are you considering leveraging agents to bring this face-to-face element to the distribution model? And do you think, how do you see this supporting your scale?
Sure. So in Kenya, the agent network predominantly started off as a cash-in, cash-out for M-Pesa. And so we have close to maybe about 320,000 agents that serve all our customers across the country. So agency as a service, we started as a pilot with insurance because what we realized is the people who visit the agent have built up trust with the agent. So as much as the agent network gives us reach and distribution across the country, it also enables our customers have a point of contact with customers. If there's an issue, they know where to go to. They don't have to find a Safaricom shop. So there's a level of accessibility that partnering with our agents brings to the end consumer. And then lastly, it's trust. So the person who visits an M-Pesa agent, that agent has been their go-to for many, many years. So when an agent looks to you and says, look, I understand your need, and I think, there's an insurance product that would really suit you, there's a level of believability that the customer has because an agent who has walked this journey with them for so long gives them, and so they tend to buy into that product. I think the last thing I want to say in our agent network is in Kenya, the agents have become interoperable. So you can go to an agent and he won't just be an agent for Safaricom, but he might be an agent for another telco. So working with our agents on another revenue stream for them also then incentivizes them to be more loyal to our network. So you add value, you train the agent because you can't just sell insurance if you don't have the basics. So you upskill your agent, you give them another revenue source, and then you use that as your distribution chain. So we're going to pilot it with insurance, and then a lot of other products. We will leverage off the same functionality that M-Pesa will then roll out.
Great. So building that trust, and I think this also comes back to that aligned incentives. Agents have an incentive, and Safaricom is benefiting by leveraging them. So that's great. Lorenzo, I'm going to give you the $1 million last question because I think you deserve it. What role do you see digital playing in the microinsurance space if the goal is to expand penetration and reduce the coverage gap?
Right. I think currently, in our market, certainly, there's tons of fintechs and insurtechs offering products online, partnerships with the telcos, et cetera. None of them have really hit the mark in terms of numbers. And there is obviously a very clear reason for that. I mean, except maybe for travel, as I said. But there's a clear reason for that. Because insurance in many markets is still a product that needs to be sold. It is not bought automatically. And especially if you're talking about closing the protection gap and addressing the lower income market, they will have questions because they won't understand. They'll be uncomfortable and they'll have to ask someone. And who will they ask if it's just immediately tech? Not a chatbot. That's not always possible. And so they would still look to the local community person that they know, who's bought insurance, who's sold insurance, who has experienced it. So they can ask all their questions and not feel foolish or feel uneducated. And so that has always been very useful. So for that initial first step, introducing insurance, convincing them to test it out by buying insurance, it's got to be that face-to-face interaction. But there's always room for technology and digital. It's going to come. And that can come afterwards when you talk about enrollments, filing of claims, sending photographs through the mobile phones, following them up about renewals, payouts, etc. So digital can become a useful tool. In fact, we've actually experimented with that years ago, and we had a product, one of our products towards climate change is actually a product that pays out an amount upon diagnosis of dengue fever. And so what happens is that you buy it in the mall, because we partnered with the mall, and so sometimes there are tie-ups during rainy seasons, umbrellas, etc. So they can get that, but they enroll it. They go on board, digitally enroll. So we get that, and sometimes if we have questions, we call them. Otherwise, we confirm. So we wait out the 14-day waiting period, because that's the gestation of dengue fever, and after that, they're covered. And the moment they have a claim, they just get a blood test, a medical certification, and send it through the mobile or online. And then we review, we call, if we have questions. Otherwise, we say, where do you want this paid? and then there's my mobile wallet, or a pawn shop, or a remittance agency. So it's become a very useful tool. And that's, I think, for now, for the foreseeable future, it's a mix of tech and touch.
Great, thank you. So I want to open up to the audience if you have any questions for our panelists. Anybody? You guys answered all their questions. You said everything perfectly. Great, well, if we have no questions, we are bang on time at noon, so we can release everyone to go for lunch. But I think they all deserve a big round of applause for sharing all their insights and knowledge. Thank you for joining me, and thank you for joining us today.
Okay.